Hello, everyone. Thanks for joining. We're getting ready to start the webinar. Before I hand it off to Nate, just want to let you guys know that any questions you have, please direct them to me. You can use the question function, or you can just send me a chat. I'll be scanning through, and then I'll forward them off to the panel once they come in. All right, thanks, everyone. Take it away, Nate.
Thanks, Juan, and good morning, everyone, and welcome to our webinar, Flipping the Script in Highly Secure Environments. I've been looking forward to this day for a long time. Our team has put a tremendous amount of work into this. We've had our heads down and been working, so hard through COVID, and what we've delivered in terms of building a vision of an end-to-end NLP platform, taking our clients from document ingestion all the way to insights, has become a reality. We are delivering the goods, and we're doing it with greater speed, greater accuracy, and most importantly, greater value to our clients than we ever have before. And to tell the truth, it's just exciting to see. When we started Amenity, about 5 years ago, the need for NLP was real. But today it's become an absolutely critical need. The pressure on businesses, the pressure on market participants has never been more intense. And to forego that, to forego every tool that's in your reach is just a risk that you can't take. The onus is on every business to seize the tools available in order to maintain their edge. And with our NLP platform, we're opening up a world of opportunity for our clients to get that edge and take advantage of the opportunities that are at their fingertips. So today, we're going to bring to you two leaders in their respective fields to share their insights from two very different perspectives on Amenity. First, we have Balaji Golapan, a senior solutions architect with AWS, who's going to speak with our own Viral Shah, our head of product, about secure production-ready NLP workloads in the cloud. We've just rolled out our hosted secure analysis solution, and he's going to discuss what a powerful tool that is as you continue on your digital transformation initiatives. And then I will be speaking with Dennis DeBuscher, the senior portfolio strategist from Evercore ISI. Evercore has been using the Amenity platform now for over 2 years to drive insights on markets and equities, now both looking at transcripts and now news and soon ESG. So I think Dennis has really established himself as a leader in how to deploy NLP to drive insights on markets. So I'm really excited for that. I think today with both speakers that you're really in for a treat. So let's get started. First up is Viral Shah, who's going to be kicking us off with an overview of some of our latest developments from our product roadmap and additions to our platform. So Viral, hand things over to you.
Thanks, Nate. And so it's a great pleasure for me to be here with everybody and to get the opportunity to speak with you a little bit about some of the work that we've been undertaking recently. I joined Amenity about a year ago, and I've been incredibly impressed with the breadth and depth of expertise around both building production capabilities around being able to ingest, process, comprehend, and distribute content and insights on content in a way that's very, very domain specific, that is really, really attuned and targeted toward the needs of businesses and specifically the finance vertical. I come from Bloomberg and Visible Alpha, where two different firms that also they help with the workflow around different kinds of content sets and being able to handle and manage the insights within them and be able to provide them into the workflow of end users. This domain, natural language processing on text content, is one that's yet still so unexplored the needs are so acute in terms of being able to handle a vast sea of information that already lives inside the enterprises that we work with. And so I'm going to just talk a little bit about a few of the major improvements that we're making. One vertical that we're spending a lot of time on right now is ESG. And with ESG, this is the new fundamentals in the market. These ESG considerations drive everything from equity valuation to the ability to work with partners, suppliers, and customers. And so I want to walk through a little bit of how we think about ESG. As part of that, I'm going to then transition into some of the development we've done on building an Excel add-in that helps you bring more of the workflow closer to you as an analyst, portfolio manager, knowledge worker, really, and being able to provide access in your desktop in a way that's highly configurable. And then finally, I'm going to then talk to you a little bit about a new method we have for consuming insights around content, and specifically the most critical secure content that you might have in your enterprise that previously was very difficult to be able to engage with other vendors and be able to understand that content in depth without a huge undertaking. So, and that's our hosted security analysis. So what I'm going to do next is talk to you a little bit about ESG. And on the ESG front, the way that we think about ESG is that we're really measuring sustainability, the ability to understand social considerations and governance-related considerations of the companies that you are focused on. As we know, ESG is, I don't have to tell this audience that it's never been more important. It's never been a bigger focus for companies and for the financial vertical at large. But at the same time, it's very, very difficult to be able to understand and fully summarize the issues around ESG in a way that one can get a comprehensive picture both on a relative basis as well as on an absolute basis. And so, the way that Amenity does everything is we're highly configurable, highly accurate, and highly transparent. We show our work, which allows you to be able to understand ESG issues in broad, unsurpassed depth. And so around that, we've now coalesced into two major product offerings. Safeguard, which allows you to be able to, right off the shelf, be able to track portfolios and single security ESG issues with ease. We track sentiment. We can help you find where there's commentary that lacks clarity from management teams. Find where there's differences between company-related disclosure and third-party objective disclosure around ESG issues on companies, and also give you an understanding of what's happening across multiple content sets, including news and filings. Similarly, and to a greater extent, if you've got an opinionated view on ESG, our Advantage product line allows you to be able to see your view and have a machine augment your ability to analyze and comprehend ESG related issues on the companies that you care about. And through partnership with us and working with our model development team and even broadening the amount of content that you can understand in depth. So this helps with everything from being able to get the early warning when a company has major issues. Here, you can see with Wirecard, it was very clear early on that there was a number of issues well before the underperformance of the equity. Similarly, there was a lot of disclosure around Altria related to the rules in the tobacco application, around issues regarding company culture with a company like Ubisoft, being able to see well ahead of time the kinds of issues that exist, and not just see them, but be able to really quantify that comprehension of the kind of issues that previously were unquantifiable. And really, our hallmark, because of the way in which we do NLP with unsurpassed depth, is that we can quantify things and we can be highly accurate and highly precise with it. Similarly, being able to see that there's like lawsuits or other kinds of negative catalysts ahead, likely for companies, they affect everything, including bond ratings. And so this is as much of a consideration as any when thinking about the true fundamentals of a company and how they affect everything from the creditworthiness to a company. So I think at this point, I'll then I think really what we do, and the reason that it works so well, is that we understand context. We know, how an issue is being discussed, and we understand the difference between something that is really about a specific topic versus alluding to a topic. And we can understand that climate, in the first case, the economic climate, is unrelated to climate-related issues, for the company. And being able to tell the difference and be able to do that in really great detail, and understand the companies and the entities to which we ascribe negative and positive sentiment is really one of our core capabilities. And as we've seen, firms like Moody's have integrated it very deeply into their process of being able to understand the creditworthiness, to be able to really even think about the ratings process. And as a final note, on our, we've got the ability to break things down in a great deal of detail between the different kinds of factors, be able to break it down into not only the E, the S, and the G components, but also into the specific types of events underlying it because of our very broad taxonomy. So in thinking about why it is that we tend to excel at it, I think that understanding the ability to bring the content to you in a manner that you can consume readily is a key piece of it. And then on that note, I'll take you to what we've been building in Excel. And so in our Excel environment, we now allow you, if you are a Office 365 user, to be able to bring in our key drivers in our ESG scoring. And so this allows you to be able to quantify the fundamentals around key topics. Like in this case, you're looking at guidance on the restaurant industry, and you can very easily programmatically bring in based on a date, a company, and the specific key driver that you're interested in, be able to bring in a score that lets you see the sentiment around transcript commentary about topics like guidance. Back to ESG, if you want to be able to score ESG and see those considerations as they evolve for a set of companies, you can do that across a universe as well. And you can see major changes. You can look at companies on a relative basis, be able to look at the trend, and then even be able to look at alerts on a daily basis. Really, there's multiple different ways of being able to bring in ESG content, really just limited by the imagination to exactly what you are interested in. You can also bring in the underlying extractions around the key drivers and use them to be able to, for decision support, as well as thesis support, and then use that as a way to be able to then, understand companies with incomparable depth. And then the third topic, and one that we're really excited about having, Balaji here and telling you and showing it to you, is that for a long time, we've had two different ways of engaging with our clients. We have a cloud-based capability where we ingest content that we source through third parties, like news, filings, and transcripts, and we then produce we have a SaaS product with analytics capabilities, as well as a viewer that includes the ability to look at the underlying extractions in a great deal of detail. And then in addition to that, we've had on-prem engagements where we work closely with teams and partner with them to bring on their content set after a close partnership, and we do an on-prem install. And now today, what we're excited about talking about is a third approach called hosted secure analysis. And with hosted secured analysis, what we're doing is giving you an API-centric document processing workflow that allows you to be able to bring in even your most secure proprietary and confidential documents and be able to process them natively over the cloud and be able to receive exactly the data that you're looking for inside those documents. And so I'm going to do a quick demo of hosted secure analysis now. And so as an example, I've got there's news about McDonald's, and here McDonald's is being sued by former Black franchisees. And so that's a clear social related issue when it comes to ESG. So I can take the text from this document and I can analyze it here. So I can take it and paste it. And this is while this is an API-centric workflow, this demo workflow really shows you the capability. So we can pick the input format, we can pick the model, and we can pick the output that we desire from this document. And here I've picked the ESG model, and we've got hundreds of models that are suited for purpose, whether it's being able to assess risk, being able to understand ESG considerations, be able to do deep fundamental analysis on companies and topics. We've got a model for it. And so here I then click Start Analysis. And what this is going to show you is the ability to work with Amenity's tools and processes to be able to bring in the data and insights that are embedded inside of this document programmatically and systematically. And so today's knowledge workers and PMs and analysts don't have the time or energy to to be able to monitor all these different topics and issues. And so the ability to do that systematically is absolutely critical, as Nate was describing. So here, as you can see, a couple seconds later, I've got all of the extractions inside of this document that relate to all of the issues. So here we have a sexual harassment comment that we've negatively ascribed with a negative weight to the harassment and assault related topic with the polarity negative. And so, as you can see, this is weighted. We have a number of different slots and pieces of metadata around each of these different extractions that we bring in that you can directly download and bring into your workflow. So it's all the insight from the document brought directly to you. And this can, because of the way that HSA works, we don't ever take possession of the content. And as a result, you essentially present the document via API. We process it based on the model that we work on together, and you receive the results, and then we move to the next document. And so this is really exciting for us because it allows our clients to be able to very quickly get value from what we do and be able to quickly iterate on exactly what you're looking for. So with that, and then finally, there's a fourth mechanism by which clients are now able to work with us, thanks again through our partnership with Amazon, and that's the marketplace. And so we now have data sets available on the AWS marketplace in the data exchange to be able to work with our data. And so the first two data sets are ESG news and COVID-19 related sentiment as well. And so if you don't have an AWS Marketplace account, I encourage you to get one to get the ability to evaluate our data there. So we've got both complementary and commercial content sets that are available there so that data science teams can directly ingest them and work with the content. So this time I wanted to transition over into a conversation with Balaji Gopalan. So as Nate mentioned, Balaji has been working with us to help get our capabilities over the cloud with HSA and beyond ready for commercial viability. And it's also been a real pleasure working with him to see just how thoughtfully Amazon's cloud is constructed and how deeply they think about every issue around operational excellence, client value, and so forth. So Balaji, if you are there, I'd love to get into the conversation with you.
Great. Thank you, Viral, and thank you, Nate. Great to be here as part of the Amenity Analytics conversation, and happy to join and share my thoughts in terms of what I'm seeing, and happy to field questions if there are any. So my name is Balaji Gopalan. I've been with Amazon AWS for 2+ years. I've been in the financial services industry for more than 20 years. I started off at Morgan Stanley and then at a quant hedge fund. I worked along like electronic trading, algo trading, and time series analytics. And now at AWS, I'm actually helping customers in terms of how to architect on the cloud. There's immense opportunities that cloud begets. So how to architect on the cloud in the best scalable, highly performant, secure way. And I've had the pleasure to work with Amenity Analytics, especially on their ESG offering. What I notice, especially within customers, is financial services customers actually value the power of cloud. And with AWS and the broad set of capabilities, complemented with the rich ecosystem of our partners like Amenity Analytics, it can help transform in many ways. Like I've been working with several customers. What they realize is data is a strategic asset, what they've been accumulating over several years. Data is a strategic asset. How can I realize value from it? And how can I actually help not only just the data science teams, but across the organization be able to realize value from it? So that's the theme I've seen, and I've been closely working with multiple customers on it. And the way they're seeing this is what used to be considered like a cost is now they're thinking in terms of, especially now with the cloud and the partner capabilities, they're thinking about like how can I make that into a revenue opportunity. Like some of the data that I have and some of the insights I'm able to glean, either it's part of ESG scoring or other machine learning techniques that I can apply on top of it, or even just AI tools and services. How can I glean insights that go beyond what was possible before? So that's another theme that I'm seeing, and we're all happy to join the conversation. Feel free to ask questions.
Sure. Yeah. No, it's been, I think, we're seeing that same thing. And I think, where we had seen an evolution from, an understanding and comprehension of what it means to work, and do large deployments over the cloud, to now determining exactly like how do they deploy their budgets in a way that allow them to, find really good alignment with use cases that benefit their organization. And so, in seeing that, I think for us, like, where we think that, we have value to bring in these kind of engagements is that we start with like the end user value, and try to understand exactly, what the outcome is that the client's trying to generate. And so that last mile, being able to, the tactical model around being able to provide that last mile value, to the client, is greatly enhanced by our ability to, provision over the cloud. And so,
yeah. Yeah, and very true. Like another thing I'm also observing is like especially the adoption of AI and machine learning, especially across financial services institutions, that's growing immensely. Like for example, I see like ESG and the wonderful product that Amenity has, right? In terms of how you're able to glean those sentiments, you showed us as part of that demonstration, and even able to come up with that ESG scoring mechanism. That's quite valuable. Customers are also looking at, hey, how can I decompose that and get into more granular details? I've seen those questions being asked by customers. So I also see like broad application of machine learning, like whether it's in their core processing or even at the client facing, right? That entire spectrum, I see a lot of adoption of machine learning, especially more recently in the last few years. Like on one side, I notice, especially within the core processing, right? I see them focusing on, say, compliance or fraud detection, right? And the other aspect is around like document processing, right? There's so many financial instruments, the taxonomy around it. So I see a lot of machine learning applied there, and tools like the ESG solution, the Amenity Analytics sentiment that you showed, those kind of come into play. There could be like MNPI data that I might have, which I cannot disclose yet, but I want to run against the ESG scoring mechanism. I'm able to do that, right, on using like Amenity Analytics, the ESG offering. And it goes further on. Like some of these sentiments actually drive signals that help make trading and analytic decisions. I see that also being heavily used. And then in terms of other aspects of machine learning, they also have something that I notice more often is around product recommendations, customers' preferences to certain products, either within the insurance space or even within like financial services within across different products, product offerings, recommendations. There's a lot of machine learning there as well. And then everybody knows and is familiar with like how they see that offering and the customer experience angle, whether it's like chatbots or call center optimization. That's another spectrum too. So like what you're doing is amazing from an NLP, and there is a lot of innovation that's happening across different places, and customers are able to leverage partner tools such as yours.
Yeah, I think what you describe around the customer analytics aspect is a piece where we've got some really exciting work that we're doing around the voice of the customer, especially as it relates to the types of topics, the different kind of adjectives and adverbs that they use to describe those topics in the course of a customer call with a representative. And so some of our clients are engaging with us to be able to understand in unprecedented depth the topics around wait times or the cost of the products and services that clients offer. And so what we do there is that if for firms that nowadays everyone records, they record all of their customer interactions, even the calls. And so when they provide it to us with speakers identified and text, we can then turn that into a very rich, structured set of information that helps one understand exactly which branches and locations are outperforming and underperforming, which what new products and services are being received well and less well, directly from like the very primary voice of the customer, as opposed to asking them for a survey or so forth, because it's something that they're doing contextually in the process of just trying to get better service. And so that's been for us an area that we've been really excited about too. And as you mentioned,
very
MNPI.
true. Sorry, go ahead.
Oh yeah, I was going to say the MNPI piece, and there's all kinds of confidential, proprietary information that our customers have, and so we've really excelled at deploying on-prem because we work with very large enterprises, and so we work with them. We've now honed an approach that allows us to be able to deploy servers, be able to build the right custom preprocessors and post-processors, install our engine, and iterate on the NLP model that we use to turn their documents into insights. And what's kind of what's really exciting for me right now, and I think for a lot of us at Amenity, is that we can do that now in a way that has the benefits of the cloud, in that we can make those changes and updates to models. We can allow be able to work natively and update things from where we are, while being able to work with content that really can't leave the four walls of the enterprises that we work with. And so it's for us, it's been an exciting way to get the best of both. And so I'm curious, as you think about like the core values that people are looking for around cloud, if you think that are you seeing similar things around what produces customer value in the engagements that you've seen that have been most successful?
Yeah, especially like applying machine learning, there's a lot of things, right? And I think what comes to customers, especially when using these, is they now see the broad set of capabilities, and then there's swaths of data that they're able to actually put to use. Like, for example, one of the things that reminded me, especially when you're talking about the conversational aspects with customer experience, like Farmers Insurance was able to elevate their customer experiences using like conversational AI and extracting that into driving in terms of insights. Like you would say a lot of these things, actually several of these examples in our most recent like reInvent, which is our annual event. If you go online, you can see a lot of these presentations around how customers are leveraging AI and machine learning. And the other thing also we notice is with databases, they want to access diverse data sets, right? So they're looking at not only their data, but also in times like these, like something within the lockdown and recovery, they're looking at alternate data sets to actually drive those insights. They're combining that with their proprietary data, getting access to diverse data sets, either through the data marketplace, as you mentioned before, like where Amenity is making their data available. There are also other data sets that customers use, and combine that using a broad set of capabilities. Like if say that database is actually having graphical representation, if there is a lot of correlation, they're able to quickly spin up a graph database like Amazon Neptune to do those analysis. Or if it is like an analytics, if it's a more like a multi-dimensional, they're able to quickly spin up, say, something like Amazon Redshift or partner products to analyze that data, dive deeper into those insights, and get to them much quickly. And that's the thing that's actually very transformative. And if they think that the key theme is they're able to access diverse data sets, choose the right tool for the right purpose, and apply that to gain insights that and at a much faster pace. I think that's what we see more often.
Great. We're excited about the same trends, and we think that the knowledge graph and the ability to link multiple data sets in the way you described together are going to be transformative for a number of our use cases, including supply chain analysis and so forth. One thing that as we enter this world of providing more and more cloud compute, even across new kinds of use cases, as I mentioned, sometimes our clients have worked very closely with us, and we've worked very hard with our clients on being able to provision these services, be able to spin up machines, and maintain and upgrade our footprint as they've lived in client environments. And now I think what's one thing that we're really excited about is just thinking about how when you think about elasticity of being able to get things up and running in this world of working with an API, it seems like there's going to be some big advantages there. And I'd love to understand if you're seeing the same thing and how you think about elasticity.
Yeah, Viral, you bring a right point, because elasticity is one great thing, but there's more reasons why we see customers actually moving or adopting the cloud, right? The first is predominantly the agility, right? They're able to quickly spin up resources as they need them. I mean, sometimes maybe deploying hundreds or even thousands of servers in a matter of minutes. So if I have a great idea, if I have an experiment, I quickly experiment it. And if it's great, it's wonderful, I'm able to innovate quickly. If it's great, I pursue it. If it fails, if an experiment fails, I'm able to just quickly shut it down. So that brings the agility with the business, and they're seeing value there, right? Like, how can I get to my, whether it's getting to those insights or their applications, or if it's a data science team that's using something that's very iterative as part of the development, as part of realizing their models, they're able to experiment quickly. And that's a big factor, right? Though I see agility being one major factor, which is driven off of elasticity. When you think about elasticity, there are two aspects to it, right? It's scaling up as you need resources and scaling down as you are not needing them, right? Kind of matching to your business needs, rather than like what traditionally people would use to do is over provision hardware in terms of saying, okay, what's the maximum input that my business would need? And then when actually the business grows, it was difficult for them to actually grow at the same pace. So elasticity makes that, right, gives that choice where you provision for just what is required, and if your business grows, you automatically scale up. And if the demand lowers through the day, you quickly shut it down and you save on cost. That's another aspect. So I also want to hear like what you're seeing around those aspects, like as Amenity, when you're thinking about agility or even elasticity, what are your observations?
Yeah, so I think that because we played a different piece of natural language processing than some of these more opaque approaches that are it can be provisioned directly by working with a general purpose framework or library, like some of the deep learning approaches and so on. And so as a result, because we build a set of rules, and because we achieve a very different level of precision and recall in our core use cases, and that's what really allows us to be able to quantify that insight and be able to provide granularity down to the underlying documents too. And so in doing that, because we do it that way, we there's spinning up and down the resources required for that. In the old world, in the physical world of provisioning servers, having like limited deployment windows where one has to, update an engine, update the libraries, potentially change, pre and post processors and so on. What we've seen, and we've studied this in some depth now, is that we think we could have gotten to value and gotten to, innovation much faster, as you described, by being able to run more experiments. I think in one of the core use cases we saw, with a large multi-billion-dollar multi-strat firm, they felt like, whether it's being able to add entities quickly and iterating on them, or being able to, add an additional set of rules to our engine, we could have taken a 4-month engagement and brought it down to 5 weeks. And so that, 3 to 4x improvement, with much less involvement of non, data science type personnel, less of a need for IT overhead and IT resourcing, is something that would have been, transformational in getting to a, much broader set of use cases, I think, with that engagement. I think, there's another one similar with an equity-based fund where we felt like, there's the breadth of use cases we could go after, to talk about that experimentation angle that you described, that would have been much broader now that we have HSA, because there's people, investors want to understand the considerations, and they want to understand a company in a certain way across all the documents they have, not the subset of documents we might have available via cloud. And so, so I think that also plays into it quite well too.
Yeah, well, the other thing I also notice is in terms of the cost savings, right? Like whenever I talk to customers, one of the key reasons they're moving to cloud, I mean, the conversation starts off with primarily about like cost savings, right? Because they're able to trade capital expenses for like variable expenses and just pay for what they consume. And
Right.
so one aspect, that's a variable expense that's much lower. But then because of the economies of scale, the cost to the customer actually drops much further, right? For example, Dow Jones migrated their data center and actually had a global savings of over $100 million just in infrastructure cost, right? So on one aspect, you see the agility, the elasticity, you also see the cost savings. And then
Yeah.
the other is we talked about innovation, right? Innovation, because they're able to run those experiments, is also another aspect of innovation, which is like firms are able to focus their highly valuable IT resources on developing applications that distinguish one from the other, rather than managing what we call as the undifferentiated heavy lifting of managing like the infrastructure. Instead of managing the infrastructure, they can focus on the core competencies that distinguish them from the others, and that drives the innovation. And that's why we see customers like seeing value in data, extending that beyond what they were able to do, and coming up with far more impact, right? In terms of whether it's being helping them in making those trading decisions, or even just understanding the market itself.
Yeah, that I feel like that's been one of the most exciting parts, because that the tactical piece around, the build, running the technology footprint relative to instead focusing on, new ideas and focusing on innovating. It's been it's something that plays more, very well to what we're excited about, iterating on with clients too. And so, that it takes engagements where previously we would have needed to work with a team. The team would have had to, allocate resource across IT. They would have also had to, budget a lot more time for the deployment, and getting into production, where, it's 3 to 4 months out, and involving where, half of it was related to, model development and our, improving on the NLP to get the data that they're looking for. The other half was really, as you talked about, the cost associated with provisioning resources and servers and managing the updates. And so that's, I think, getting to the part where we're excited about and that the client's excited about at a much lower cost, much earlier, is pretty exciting for us.
Yeah, and then the other aspect is also being able to go global, right? With in terms of the wide reach that partners and customers are able to actually tap into, like whether it is across the globe, right? You can have something deployed and accessible in a matter of minutes. I think that's another thing that also I hear from customers in terms of them seeing the benefit of the adoption.
Yeah, that's a really good point. Because we do we'll go across talent to do an install, or we'll log into to a client environment, and now I think that's going to become much more increasingly updates over the cloud into an always on utility that really is agnostic to the time zone or the where you are. And so I think that's we're seeing that right now with one of our engagements where we're working with a team that's equally distributed across Europe and the US. And there's depending on which team is executing on the work, there's really the ability to understand tactically how to schedule things. That's going to all become much easier going forward, which is something also you're pretty excited about.
Yeah, and I think you also mentioned about like the security aspect of HSA solution. You may want to talk about that as well.
Yeah. So, I think that when we enter our engagements, often enough, the more important the content that we're analyzing and producing value from, the more that they've got to mask the content. They may have to modify it. They may have to, generate, a different version of it. And so, in doing that, it means that our model is less well attuned for ultimately what we're the value that they're trying to derive from it. And so then you end up with a poorer fit. You end up having to do more iterations to get to where you need to be. And so I think that the HSA model and deploying over the cloud securely is going to really change that equation completely. So thanks very much. I've really appreciated the opportunity to work together and and looking forward to the next set of milestones we deliver together, and definitely appreciate your time and your context in helping our audience understand where the world is going.
Cool. Thank you, Raul. Happy to join this conversation.
Thanks. So I'm going to hand it off to Nate, who's going to introduce Dennis, and we're going to talk about sentiment analysis using key drivers.
Great. Thanks, Balaji. Thanks, Viral. That was a terrific conversation, and I appreciate it. Now I'm really excited to welcome our next guest, Dennis DeBuscher from Evercore ISI. Dennis was one of our first customers, and I've continuously been impressed with Dennis over the time that we've worked together. Dennis is a senior managing director at Evercore, where he is in charge of their portfolio strategy research. And in that capacity, he publishes every single day his thoughts on the markets, and extensive data-driven pieces too. So it's a level of work that I'm in some ways astonished by, and some days it's multiple pieces per day. And in that work, he has now integrated the Amenity data that comes from our platform. First on transcripts, then on news, and soon ESG. So I want to just welcome Dennis, and I'm excited for him to share his experience working with Amenity, and how he's using the data to drive insights. So Dennis, welcome.
Hey, good to be here, Nate. Thanks
Awesome.
for having me.
Absolutely. So, to give the participants today, some context, can you just talk about your job and your role at Evercore?
Yeah, sure. And I'm just pulling up my screen here so everybody can see it. Just let me know that it looks okay. But so yeah, my job and role at Evercore, like you mentioned, I run portfolio strategy and the quant groups there, as well as something called, I guess, which is a new category, equity link strategy, which takes a kind of derivatives component to a lot of the more fundamental macro work and quant work that we do. To give you an idea of the way we think about the world, it's kind of twofold and different from what some of the attendees might be familiar with from a typical strategist. We spend very little time on 6 to 8 month sector views picking a market target, et cetera. We spend an enormous amount of time thinking about two things. One, the next 3 to 4 months of opportunities that we can exploit, and the longer term kind of macroeconomic influences that are going to drive the large underlying trends. I think we've been pretty successful in using Amenity and incorporating that into our framework, particularly on the shorter term areas. When I say shorter term, again, 3 or 4 months areas, because we spend so much time and always have spent so much time on sentiment, behavior, kind of behavioral biases. We wrote a piece not too long ago called Stop or Avoid Donating to Renaissance. We can discuss that in a second if you want. In any event, and what we found, at least for Amenity and its helpfulness, is trying to exploit opportunities as they arise, with why a narrative might be deviating from what you might be seeing more fundamentally, or can infer from either current data sources or new data sources. So that wasn't too long-winded, but that's essentially what we're trying to accomplish on our teams.
No, that was great. Can you talk about where the data that we've worked with, the data that the Amenity platform produces, fits into your framework? You have at ISI, I think more than just about any other firm have taken a data-driven approach with all of the surveys, proprietary
Sure.
surveys that you conduct for a long time, and I think that helped you integrate Amenity. But can you talk about where it fits within that framework and what it's added, and perhaps the impact that it's had on your research and the client reaction to it?
Yeah. So, first and foremost, I think, I should say right off the bat that we've actually, as you mentioned, we've done a lot with Amenity, the natural language processing tool. I do think we're still at the tip of the iceberg, by the way. And I can come back to that. As far as incorporating,
I definitely agree with that.
Yeah. As far as incorporating what we've done, it's kind of twofold. And there's kind of two aspects, I think, of the business that's evolving, and we can come back to that in a second. But it's, one, I would say that the very simple thing was to say, okay, how is sentiment just shifting for, say, key financial metrics? So one of the ways we immediately tried to incorporate it is to say, we'll take earnings transcripts, which you know about, and we'll look back at the history of these and say, where is sentiment relative to different type of key financial metrics? So some of the ones I'm showing you on this screen, and this will have, give you more context in a second, is just, well, there's the general sentiment, which is the kind of roll up of, say, certain financial metrics, earnings forecasts, business trends, investment, capital returns, product, deal, M&A. We do margin commentary, et cetera. And the reason we started with that is we wanted to say, all right, if we take the S&P 500 and we look at the key financial metrics and how sentiment is shifting relative to that, how could that be interesting relative to what some people are talking about? When I say some people, what's going on in the investment world? So an easy one, as an example, Nate, was we'd try to say, okay, everyone seems to be concerned about margins, right? And we're getting a lot of incoming questions on margin concerns. Our surveys are picking up that clients are very concerned about margins. So is that something we should be thinking about? And so if we look at that one in particular, we could say, all right, well, let's think about margins. So on this chart, what we're showing you is margin commentary, or the sentiment around margins for the S&P 500, right? And so the blue line is just where your current margin sentiment score, what your commentary about the future of margins is telling you, which is snapback, as you can see there, fairly aggressively, which is important. And then the gray line there is the current score, which is low, but coming back and will follow the blue line higher. And then we'll say, all right, so why should you care about that, right? Because I get it that companies are saying that margin commentary is positive, right? And of course, it's in their interest to say such things, but I think margins, and the vast majority of our clients, because of some of the survey data we're picking up, think it's not going to be the case. Well, then we went the next step and say, all right, well, if you had, different, if you break down margin commentary by quintile, you say from the highest to the lowest, what you find is when you have very positive margin sentiment score, which is, the highest score here, you tend to have higher operating margins, which is the gray line, in the quarters going forward. And then more importantly, the opposite, right? If you have weak scores, you have low scores. So it's a way to say, okay, there's a narrative out there. Let's go look at this. Let's go see what these companies are saying. And when they say these things, does it actually matter for profitability? And so what we've done using this tool is kind of figure that out. That we can get a good look at the history of that commentary, right? See where you are today, and then figure out if it actually matters. And in this case, it does. So that's the example I would use of one. The other one is more on like the other way I think use the tool is anything that comes up that's interesting, that's not, let's say, part of the say looking at earnings metrics or financial metrics from companies. So something that I did want to focus on in this. Oh, sorry about that. Let me get that. Can you see that, Nate?
Yeah, I can see the lead slide.
I just froze. Come on, man.
No worries.
Yeah, no. So I'll come back. My network just went down as we're talking, and I apologize.
No worries.
So what I was going to get to there, and you can take back control of the screen. What I was going to get to there was deception. Oh, look at that, Nate. You can see that,
back.
I assume.
Yeah,
it's back. It's back. What
Nice.
I wanted to get to, which is important because you and I did a webinar on this together, was deception, right? People are always looking for short ideas. A lot of people assume that companies are deceptive in some way, shape, or form. And so I shouldn't generalize too much. There are some concerns that companies are deceptive about what they're saying. So we say, okay, let's look at the history of this and try and figure out if companies have been deceptive in what they've been saying over the course of many years, based on, again, looking over their transcripts from each earnings call. And so what you see is the deception score, so lower is better on this, has gone down. And 2009 or 3Q 2008, it was very high, which is right, of course, before we rolled over for the financial crisis. It had been very low. Went high during this most recent pandemic. Makes sense. I mean, I don't think companies are purposely being deceptive, but as far as the way this thing is the way we're looking at it, it made sense that people would be deceptive, i.e. they couldn't give any clarity on anything for the last couple months, but now it's come down significantly. All right, so that's just in aggregate. So what's important? Why do you care? Because we looked at clarity. We call it clarity. You call it deceptive. We call it clarity because we're going to be a little less aggressive with the language. In any event, why does it matter? Why do you care about this? Look, the lowest clarity scores, you tend to have weak performance. So on the highest clarity scores, you tend to outperform, and it seems to persist over time, and that's what we care about. So I'm trying to give you a couple of different examples here of the way we're using it. One as kind of a base framework, which is just looking at those transcripts through history, key financial metrics. We combine them with survey data. We combine them with our factors, which is, say, traditional value, relative value, growth, those things people know about. Our bottom-up company work that our fundamental analysts do. I work at Evercore ISI, so we have over 30 analysts with over 1,000 names under coverage, and so we can run some of the sentiment scores against them and give them a heads up on how things might be progressing, and then some of the more bespoke things, which I think is a real opportunity on a go-forward basis. So I hope that answered your question there.
Yeah, absolutely.
Kind of like I said, the tip of the iceberg.
Well, I mean, we'll get back to the tip of the iceberg in a second, but this is captures exactly what I love about how you've used our data is that you've been able to go from hypothesis about market, some sort of market anomaly that you're looking to analyze, directly to data set and score, to a validation process of that, and then to that next step, which is what you're talking about, of combining it with other data sets that you have in order to create watch lists, in order to create opportunity sets. And it's that process of again, idea all the way to actionable names that I think has been just awesome about how you've been able to take our data and apply it directly in a way that benefits your internal teams as well as your clients. And I think it, in a
Yeah.
lot of ways, it's really unique.
Yeah, so along those lines, and I should have showed, so I want to highlight this. So this is something we've done more recently, Nate, as you know. So at our firm, we have Evercore ISI recovery versus quarantine portfolios. So the stocks that our fundamental analysts think will benefit from a recovery, and we can define a recovery as a successful vaccine treatment, and more or less that gets us on the path to 100% capacity as an economy relative to say 90%, and quarantine is kind of basically some version of what we're going through now, which is a start and stop economy as we deal with the COVID dance, if you will, of flare-ups over time and worries about that, et cetera. And so what we did was run the recovery versus quarantine portfolio versus a news sentiment towards COVID score. So you could see there, so you can see there, so this would be inverted there, as sentiment is improving towards COVID, our recovery portfolio outperformed. This has not been updated recently. I wish I had it for today, Nate. I apologize. I'm in the process of doing it now. We'll have it tomorrow. For those that are interested, you could pass it along.
Yeah,
we'll see how it's
absolutely.
progressed since then. But you could see that, there's a decent relationship, and that something just is, okay. So the reason why I bring this up is to say there's a lot of different reasons why people are going to think that we're either going to be in a recovery or going to stay in quarantine. We know it's a hyper-political size backdrop that kind of informs that. And the only way I think to really kind of think about a check on whether or not you will see an improvement will probably come down to something like the sentiment score to say, okay, it seems like the vaccine progress is working along. It seems like the economy is handling, say, the fiscal cliff, and we're getting through the election. Is the COVID outlook really improving? And the sentiment score is a good a check on that. And obviously, that would be, let's just say it improves as an example. It continues to improve. That would be very good news for the recovery portfolio.
No, that's a fascinating use case, and one of the ones that I really like, in terms of it showcases the ability to really use natural language processing to take new views on the market as news comes out. It's not just a tool that has to go deep back into history. When COVID hit, data from a year ago, 2 years ago wasn't relevant. What we needed was real-time information, and these data sets that you're showing here that we developed, analyzing news, analyzing the most recent sets of transcripts to understand COVID impact, really were able to show how you can use this in real time to understand such a challenging market. So I really appreciated that, and I'm looking forward to seeing that update tomorrow. Now, another area that we've been very focused on, that I think is a great use case for our platform is ESG. So I'd love to hear your thoughts on ESG and the impact that it's having on how you look at markets, how you assess opportunities. Maybe this can be a segue into your vision of where you see this type of analysis going in the future.
Yeah, so I should start off by saying my only interest in ESG is from a very mercenary point of view. How can we benefit or not benefit from it? And I'm not saying that because I disbelieve in the whole concept of it. I just think that that's where the opportunity is. I mean, this is just how I think about it. So it's very clear that it's here to stay. I mean, you probably even discussed this on the call earlier before. I mean, there's certain European funds that have to put a certain amount of money into ESG. There's top-down measures from pension funds that require it. And so it's here, and it's going to be with us forever. So the way I would like to attack ESG, and using, say, the natural language processing tool as a good example of this, would say, okay, how do we think about the changes in the E, the S, and the G from a sentiment point of view, right? And and which one has the largest impact on stock or market returns, or subsector returns? A better way to say it, right? And that's how I would think about because what's going to happen with ESG, because it's still kind of nebulously defined from just a portfolio manager point of view, how much of the G can you weight versus the E, et cetera. What's really going to be interesting is to try to figuring out the interesting opportunities of where something might be considered ESG favored or not, and that is changing, right? So how can I exploit that? How can I exploit where XYZ company is considered an ESG darling, and guess what? Its ESG score, based on some of the things it's saying, is changing, or news towards it, right? Is another example you could take, and obviously vice versa. So that's how I think about it. I guess it's a short version.
Yeah, look, I mean, I think that the opportunities to understand ESG reality versus ESG perception. We're rolling out really in the next few days our greenwashing capabilities, which are designed to analyze just that. When are companies actions not matched by the sentiment around those, either in a positive or negative way, to find those either false darlings or companies that just aren't walking the walk. So again, it's a great use for our platform, because we can bring in those multiple perspectives, whether it's from transcripts, whether it's from news, whether it's from regulatory filings, whether it's from real research reports, to create a more comprehensive view and find those variations that perhaps lead to opportunities, at least give you a definite string to pull on.
Yeah. All right,
Yeah.
go. I was gonna, because you're kind of opening a little door for me, and I want to kick it down if that's
Let's do it.
down if you don't mind. Yeah. So this kind of gets to where where things are headed, and so maybe some of the listeners would be interested in this, but I think that where things are headed as far as it relates to something like the natural language processing tool in particular, but it could apply to other data sets as well, is what if a portfolio manager knew all the things we just discussed in real time? It's ESG reality versus perceived reality, the clarity of the stocks in its portfolio from a margin point of view, a whole host of bespoke things that you could think about and understand where you might have these different exposures. And I'm wondering if 5 years from now, we're going to see a whole host of tools, where it could be very easy for any portfolio manager that doesn't have to be necessarily be a data scientist to understand, like, these are my exposures, these are the things I have to worry about or not. This is a theory I have. How can I apply it quickly? And just being able to do it from your desktop. I think that's a very powerful tool, and likely to happen, in my view, and is how you compete in this environment, quite frankly.
Well, we've seen, how sensitive, individual names are to factors, and I think this has been our view as well, in that applying the work that we're doing and trying to distill it into these factors. We call them amenity key drivers that we can apply, so that our clients can understand their exposure to these things that I think one of the things you've been able to show is that these actually drive not only financial results, but they also drive returns. So adding these new factors to your analytic toolkit is something that's I think incredibly valuable. And I think it's like you said, I think it's the future of how you take a top-down look at your portfolio, which again, in today's world, is just incredibly important. You can't have a portfolio and really understand your exposures without being able to aggregate it. And this set of tools lets you do that, whether it's on those key drivers or whether it's on ESG. It's equally important to be able to aggregate and then interpret and and act based off of all of that. So
one of the things to your point, it's not highlighted here. We haven't done it for a quarter or two because of COVID purely. But as the economy normalizes and the cycle normalizes, which seems fairly likely, one of the things we did is kind of to your point is you take a portfolio, we just do it with our stocks under coverage, and each earnings sentiment look for deviations between earnings sentiment and consensus estimates, where people are where a stock is either has high or low estimates relative to history or sentiment towards that, I guess. And so you look for those deviations, and then we can do an option strategy around it. And so we've done that, and actually the results have been, we're actually really good. So just a point there of just how creative and how powerful this can be.
Yeah, I mean, I was even over the course of the weekend, looking within some specific sectors. I was looking at the airline sector, and I noticed that there was a big variation between, the sentiment that we saw from Delta, the sentiment that we saw from American, versus what we saw from United and what we saw from Spirit, which were both decidedly negative. And when you dug in, you saw very different approaches to managing the crisis. Now, looking and seeing, how the stocks react from here is going to be equally fascinating, because they have taken very different approaches to how they look at this very challenging macro and trading environment for their specific companies, even though they're in the same space.
Yep.
So with that, I'd love to wrap things up and let you share before we go, some insights that you have on today's world. Again, when you publish on a daily basis like you do, I just am always impressed with your ability to pull out things on the markets, and you're able, again, to integrate Amenity and our platform into that. So I think our listeners today would really benefit from seeing that applied in real time. So,
all right, good, and I think the listeners probably appreciate it more so than our a lot of people that have a tough time wrapping their heads around the fact that the market is not expensive. So I'm going to explain to you why the market's not expensive. It's cheap and is going to be biased higher, and how we're using an amenity to inform that decision. So the biggest driver of returns in the market, or higher valuations, at least on a traditional valuation metric, has been cash returns, right? And so what I'm showing you here on the gray line is cash returns is the percentage of cash flow, which is defined as buybacks plus dividends. And then you can see X financials CapEx as percentage of operating cash flow. So there's a worry in this risk recession that you're going to see, cash returns come down. And then so if cash returns come down, then all of a sudden the market is not as attractive relative to, say, risk-free rates. Okay, so let's look at that. Okay, is there going to be a real sea change in cash returns? Well, we looked at the earnings transcripts the last 3 quarters, and what do we find? The S&P dividend sentiment score has come up significantly and much quicker than you saw in the post-financial crisis period, and the stock buyback sentiment score, although lagging a bit of it, is coming up. Now, one of the key things that will inform your ability to maintain dividends plus buybacks at the rate that we saw in the pre-COVID period, which made, again, stocks very attractive, is going to be not only obviously the recovery, but margins. I already talked about this. Margins commentary sentiment score looks pretty good. Like, margins look like they're going to be a little bit better. We know that on a forward basis, if sentiment scores on margin are positive, you tend to have higher profitability in the forward quarters. So I sum that all up in this. When you think about it, I should say when you think about it, right now, the percentage of S&P 500 companies with total cash return yield above 10-year yield is 87%. Okay, if I drew a PE multiple relative to this gray line, what you'd see is that the multiple has gone straight up. So although a traditional valuation metric says the market is expensive, what you really care about is what can my return be in stocks relative to alternatives. And when you have AAA rates at around 2%, BAA rates at around 3.20, I think was the latest, and you have earnings growth expectations anywhere in the 5 to 8% range for the S&P, and cash return yields, 87% of companies with cash return yields above 10-year rates, the market is just attractive, unless you think that the buyback outlook is going to change. As I just showed you, it doesn't seem to be happening. Unless you think the margin outlook is going to change significantly, it doesn't seem like that's going to be happening. Or if something is going to happen, it's likely going to happen on the policy side. So my takeaway for everybody is to say that, the market is really attractive, and the narratives to why it wouldn't be attractive, leaving COVID aside for a second, companies' ability to maintain or increase buybacks, dividends, et cetera, is not a reason to assume that they're going to see payouts decline. And so that's an example of how I'm thinking about the market today, and Amenity and the tools directly influencing that view.
No, it's a great use of our key drivers, of specifically that capital return driver to do what we talked about earlier. You had a thesis on the market, and you were able to really use it to get a differentiated real-time signal into how that applies today, even in this tricky market, and take it all the way back to what it showed in the last major recession that we saw in 08-09. So really interesting and impressive.
Yeah, that's what I would say. One last thing. I mean, there's so much noise in macroeconomics in particular, and top-down thinking of the market. Especially, I harp on the margin thing because that's something that always everyone has an opinion on and always seems to be wrong. The fact that we have a way to actually look at this and quantify it in a real-time basis is really important. Really important.
In a way you've been able to validate. A way that you validated that this, that this is a statistically significant signal. So I think it has even greater relevance.
Yeah.
So great. Well, Dennis, look, that was wonderful and really interesting. I had high expectations, and I certainly wasn't disappointed. So thank you for that. And Viral, Balaji, thank you guys as well. Really happy with how this webinar went, and everyone who joined us. Thank you. If you have questions, please feel free to reach out to me, Nate at amenityanalytics.com. And be happy to talk to you about how we can use our platform to help you drive ahead with your digital transformation initiatives. So thanks, everyone. Dennis, Balaji, thanks again, and have a great day. Bye-bye.
See you then. Thank you.